Broadcom just beat earnings, revenue up 48%, AI revenue up 143%, and then the stock fell almost 15% in a single day. Here is the strange part, almost nobody else in the group moved, so what actually broke? Start with what the company actually did versus what the stock was priced for. The business was fine, it beat on revenue and profit, and AI revenue more than doubled from a year ago. What missed was the forward guide. Management met a sky-high bar, but it did not raise the number, and on Wall Street, a beat without a raise can still be a reason to sell. Now the tell. If AI demand had genuinely cracked, the whole custom silicon group would fall together. It did not. Broadcom dropped almost 15%. Arista fell 7%. Marvell about 3%. Nvidia and Cisco 0.1% each. The market repriced the most owned name in the group, not the trade everyone is in. So why Broadcom alone? Because it walked in priced for perfection. Its momentum gauge, the relative strength index, sat at 73 going in, its hottest reading all year. One session reset it to 44, dead neutral. But the rest of the layer never cooled. Marvell is still near 80, Cisco in the high 70s. The one name that reset is the one that reported. And the demand itself? Still there. Consensus still models Broadcom growing revenue 61% this year, second only to Nvidia's 81% and well ahead of the rest. The AI line that disappointed still grew triple digits. What actually moved the stock was a single forward guide, measured against a bar that had been raised for months. Here's what most people miss. Broadcom and Marvell get traded as one AI networking idea, but their fingerprints are opposites. Broadcom scores high on value and quality and low on momentum, a big, profitable, cash-rich business. Marvell is almost pure momentum. Same label, opposite stocks. That is why the same headline hit them so differently. Measure each name against its own 20-day trend line and the picture flips. Broadcom now sits below its line. The premium that built into the print is completely gone. Almost everyone else is still extended above theirs. Marvell is a remarkable 44% over its line. Broadcom already took its medicine. The peers that didn't flinch are the ones now carrying the risk. So who was right? After a near 15% fall, not a single analyst cut the stock. The mean analyst target held at $509, leaving Broadcom about 24% below it. The options tape stayed calm. That is the signature of an expectations reset. The price came back to the model, the thesis did not break. The MarketDecode read, "Separate the leader from the layer." Broadcom still owns the AI profit pool, the scale, the margins, the analyst conviction. Thursday simply proved that owning it is not the same as being paid a premium for it. From here, watch two things: whether Broadcom reclaims its trend line and whether the stretched peers finally mean revert. If this helped you separate the signal from the sell-off, do one quick thing: subscribe to MarketDecode and tap like. One clear market story every single day.